Hello, and welcome to this month's Dairy Market Update. Today, we take a look at the key dynamics in the dairy industry and how they might influence markets over the coming season. Despite the uncertainty in 2019, the UK wholesale market value of milk was actually the most stable it's been for a decade. According to our Milk Market Value Indicator, the UK market saw a range of values of just 1.8 pence per litre over 2019. While the indicator has been relatively stable, it only reflects the average market value for milk. In fact, last year we saw prices drop for butter, rise for skim milk powder, and remain stable for cheddar. But what do we expect to see influencing prices in the 2020 to 21 season? Globally, milk production is set to grow by just 1% in 2020, while demand is expected to rise by almost double that. That should mean that market prices firm. However, demand may be impacted by a slowdown in economic growth, particularly from the oil-rich countries who are large importers of dairy. There is also a high risk of trade friction, either from an increased frequency of trade wars or Brexit, both of which can stop the smooth flow of goods, potentially increasing the cost of trade and lowering prices. African swine fever will continue to put pressure on global protein supplies. While African swine fever has meant a drop-off in demand for whey powder, it has meant an increased demand for other proteins as the Chinese look to replace the lost pork. This, along with the absence of skim milk powder intervention stocks, should bring further upward support to skim milk powder prices. However, the recent coronavirus outbreak is further impacting demand for food in China and causing supply chain challenges. Reduced footfall is increasing stock levels at retailers, leading to the potential for increased food waste, and it is difficult for food to move around certain areas of the country due to restrictions. For the UK, trade with China is still small compared with domestic and EU sales. It is more likely that the EU and the UK will see a knock-on impact from New Zealand being unable to ship their product into China and looking for other outlets instead. On the fat side of things, we saw that, after the peaks in prices in 2017 and 2018, some food manufacturers reformulated products to reduce their reliance on butter. As a result, we have seen demand stripped out. However, it's worth noting that global butter prices are now sitting below the average for the last 5 years, so comparatively speaking, butter is not expensive at the moment. Domestically, consumer demand is shifting away from fresh milk and yogurts and towards more indulgent dairy categories such as cheese. This has led to some issues with excess processing capacity in the fresh milk sector. That, plus the drop in cream values, has put pressure on margins for liquid processors. We have seen the result of this in the loss of one liquid processor and financial pressure on others during 2019. We expect GB milk production to reach a 29-year high at the end of the 2019 to 2020 milk year. At the end of December, production was on track to meet this target. However, since then, production growth has faltered and was below expectations in January and February. Preliminary analysis suggests that this upcoming milk year will reach similar production levels to those forecasted for the current season, given normal conditions. There is already an expectation that spring milk volumes will be slightly lower than last year's exceptional highs. However, there are now additional concerns about ground conditions. If farmers are unable to turn out their cows due to wet ground, this could add further pressure to spring production. In terms of milk prices, our Milk Market Value Indicator suggests that there is no downward pressure on milk prices from the market through to April, as our domestic wholesale markets have been relatively stable. However, high levels of butterfat and protein in the milk and seasonal production bonuses boosted average milk checks through the autumn, and both of these will reduce in the spring. We are at the start of a new era for the dairy industry, with many challenges and opportunities already starting to develop. Extreme weather events are likely to become the norm, while environmental concerns will increasingly drive consumer decisions around food choices. Changes will need to be made to food supply chains to meet the government's pledge to be net zero by 2050, and we can expect to see both political and consumer pressure on food producers to help the country meet this challenge. As we exit from the EU, we will need to reassess our view of demand from consumers, both domestically and internationally. This may mean changing what we do with the milk to ensure we are producing the right products for the right consumers. As the proportion of milk used for manufactured products increases, the importance of milk solids is likely to become ever more evident. Our Dairy Market Weekly publication will continue to keep you informed of the key factors influencing the market. Ensure you are on the subscription list by managing your preferences on the AHDB website.